Hey, welcome back to my channel. So in this video, I'm going to talk about Zillow, the monster, the beast. Yes, that website used to buy houses and recently stopped just a few weeks ago. There's a lot of things to uncover here, and I'm going to go over what is an iBuyer, why did Zillow say they stopped, what's the real reason they stopped, what this means for the real estate industry and the market that we're currently in, and what this means for you and how you can capitalize on it and make some money. So my name is Rob Olufe. I've done over 500 flips. I've purchased rentals. I've borrowed money from people. I've invested money into all types of real estate deals, and I'm here to help you achieve your real estate goals. So Zillow.com is a huge real estate website, and they started off as tech. And they actually have a really interesting story in a podcast I listened to, I think, on how I built this. You can hear the CEO, his passion behind Zillow, and why he started it to make the home buying experience and the home selling experience better for us as consumers. That was awesome. That is a great business. I love Zillow. A lot of people love Zillow. I still use it all the time. But in 2019, they got into purchasing homes, and their goal was to become another iBuyer. So what is an iBuyer? An iBuyer is what they refer to in this business as an instant buyer, or a buyer of properties who will make you an offer online, right? You go onto their website, you click, Zillow has a button that they used to have that said, like, you know, receive an offer or get an offer. You click that, you put your property information. They have an algorithm that will shoot you over an offer, or, you know, they have different methods to do it, but they either have an algorithm or then they analyze it, send you an offer right away. And you can do everything pretty much online without going through a realtor, without going through, you know, phone time or in-person time or going to an office or anything like that. Basically all online, all over the phone. Pretty freaking cool. The idea is brilliant, okay? And that is what we do in our wholesale business. We're not iBuyers per se, because we do get on the phone. Sometimes we see them in person, and we don't have all this technology and money that they have. However, we do make it really easy for sellers to sell to us. The difference between Zillow and iBuyers, other examples of iBuyers are Open Door, OfferPad. The difference between iBuyers and mom and pop shops like you and I is iBuyers have a ton of money backing them up, and they have deals with hedge funds and stuff, meaning they can purchase properties at higher prices than we can and still theoretically make a profit. That was until Zillow stopped buying houses 2 weeks ago. Let me explain. So to explain, I'm gonna share with you my screen, and I'm gonna go over a article by a gentleman named Mike Del Preti. Sorry if I butchered your name, man. This guy is a real estate tech analyst, and he really dives extremely deep, better than anyone I've seen, into iBuyers. And he wrote a really good article about Zillow Buyer, why he thinks they stopped, and really showing some numbers, some math on what they've been going wrong. And once you see this, your eyes are gonna be like, what the heck were these people thinking? So let me share my screen here, and let's talk about it. So in a broad perspective, the reason that Zillow said they stopped buying houses was because of construction. Okay, they're like, okay, they bought more houses last quarter than they did in like 2 years or something like that. We can find it here. They bought a lot of houses. They were buying like 2,000 houses a month. And this was interesting for a lot of people. Like, damn, what's these guys' game plan? Like, they're buying all these houses. They're paying pretty much retail price cash. Okay, so if a homeowner listed their house for $300,000 because that's what it was worth, Zillow would buy it for $292 cash. Real talk, real stuff. This isn't like they would make offers and not close. No, these people were closing. They were putting their money where their mouth was. It was interesting to see, especially as a home buyer. I've been in this business for 8 years, whatever, which is nothing compared to them. But we've bought and sold hundreds and hundreds of homes, and I'm seeing this. I'm like, how can these people afford to pay this much for these houses? And a lot of our colleagues and my friends that were in this business were like, dude, and some really smart people that I know were like, this business model has to fail. So their articles that they came out with when they came out said, okay, we bought all these houses, we're good, but the problem is that, you know, we just didn't think about the construction side of it. So like buying all these houses, we have to renovate them and rent them and things like this. And there's just not enough labor out there. The construction costs are high. It's hard to get materials. So they're blaming it more on construction. To my knowledge, that can't be further from the truth. Although the construction thing is a big part of it. Whether they had their construction figured out today, whether someone said, hey, Zillow, here is 20,000 of the best construction workers to work on your property, and here's all the materials, they would still lose freaking money and they would be in a bad business model. All right, so let's jump into my screen here. As you can see here, this is Mike Del Preti's website. I'll link this article into the show notes. But so look at their growth. Let's start with this. Zillow's iBuyer grew so fast, so quickly. So look at this. So Q1 they bought X amount, right? They got, this is 2,500. So Q3 they had 2,500. This is 2019. This is when they started. Q2 2020. Then they went up, and look at this. Q3 they bought close to 10,000 homes. Look at this. Like, it doesn't take a data scientist to see that. What the heck was this? Okay, so this was a Zillow problem. Basically just talking about some shareholders and stuff like that. Like, these are some gross margins, okay? Open Door, 13.4% gross margins. Profit margins, this is what they're announcing that they're gaining on homes, when it's not completely accurate because they're not putting in a lot of their expenses in there. So this is real talk now. So finally, in 2021, Open Door and OfferPad are making a little bit of money. For a long time, they were losing money. But look at Zillow here. Zillow was losing $28,284 per property, per house that they bought. And let's do some math here. If they bought, just for the sake of the example, 9,000 homes, let's do a calculator. I don't even know. So if they bought 9,000 homes and lost, how much did we say? They lost $28,284. That's $254 million loss in just one freaking quarter, okay? So can you sustain a business at a $254 million loss every 3 months? I freaking doubt it, okay? So then this is kind of like him saying what they think is gonna happen next. However, so what do I think really went sour? What do I think really went wrong? They were just buying houses too high. They did not follow the fundamentals of real estate, especially as a home buyer. If you're listing homes, you're an agent, yeah, it doesn't matter where the prices go, like it's fine, you can do your thing. As a wholesaler, as a home buyer, you really have to follow the trend of the prices because you have to understand buyer activity and seller activity. So what do I mean by this? If Zillow would have just bought these homes 20 to 30% cheaper, they would have bought a lot less homes, but they actually would have made money, or they actually would have not lost that much money depending on their other expenses that none of us know about. But there's a cost to buy these houses. There's a cost per acquisition. If you watch Shark Tank, you hear them talk about it, like what's your cost per customer? What's your cost per acquisition? And things like that. In this business, it's the same. There's a cost to buy a house in the beginning, not even before you purchased it. To gain the customer, to gain the contract, to gain the sale, there's a cost to that. And they weren't putting that in their numbers. Anyways, their unit economics, they were just priced too high. And I'm gonna give you an example, a real life example. So we'll go back to my screen here and you'll see that we purchased this house, me and my partner, Lewis, we purchased this house in Kissimmee, Florida for $136K. You can see it, right? October 18th, 2021, very recently. We purchased this home through our wholesale business. The lead came online. Our wholesale business finds off-market properties or finds homeowners who are looking to sell their properties cash and are looking to sell quickly. And then we purchase and sell to investors, or we bring the opportunity to investors and partner with people and get creative to make money for ourselves and money for our investors. So we found this house through our online marketing, and we realized it was a good deal. We could have wholesaled it, but we're like, okay, let's buy it. It's in a great area. It's a nice house. Look at it, right? I mean, it doesn't have a lot of pictures here, but you can see here. So nice house. So look, so here are some sales. The reason I want to show you this is that we ended up selling this home to an iBuyer, to Open Door. And I want to share, this is a perfect example of what went wrong in Zillow. This is it, like living it real time. So we bought this house for $136. We estimate it's worth about, we estimate it was worth about $230 to $240, okay? So it's a good deal. It needed some work. It needs about $25,000 worth of repairs, but it's pretty nice. So let's put here Zillow, we're using Zillow. Let's put here sold in the last 6 months, okay? So we can get accurate description. So our house is here somewhere. It's one of these, or this one that's sold, right? So look, this one sold for $172. This one sold for $315, but we have to make sure that ours is the same size. Ours is 3-bed, 2-bath. $287, $265, $315. So ours is a 3.2 is a 4.2. This one sold for $172. 300 is bigger. 3.2, actually it's pretty small. So $295, 3.2, $232, $213. So there are some 300 sales, $285, $200, $287. So there are some 300 sales, but there's also some 290, 280, 280, 200, 280. So yeah, we could argue that these are different, whatever. But moral of the story is, we're not gonna go into comps. I have videos that go deep into how we do this, but as you could see, like, if you don't know anything about real estate, you could say, okay, the houses are selling anywhere from 200 to 300. There are a few at 306, but they're a little bit bigger than ours, or see, this one's bigger, this one's bigger. So let's call it, it's worth 280, okay? But it needs 25 to 30,000 in repairs. So what we did was we said, hey, Open Door is buying here. So Open Door is a competitor to Zillow, they're iBuyers. And what we did was we submitted it to Open Door, and Open Door sent us an offer right away at $275,000 cash, okay? So it's like, oh, that's pretty awesome. And then they're like, okay, we have to go and do an exterior inspection. We got to go see the house, etc. They went to go see the house. They came back and then they offered us $285,000. We didn't even say anything. They went up in their offer. And I'm thinking like, okay, they're buying it at 285. The house needs like 25,000 in repairs. So they're going to be into it over 300,000 after closing costs and after all this and that, the other. And I mean, it's worth 290 maybe tops. So they're gonna be into it for like 310 and it's worth 290. How does that make sense? So Zillow did this over and over and over and over and over. Well, I'll let you know that we accepted this deal, and by the time that you see this recording, we would have closed, because closing date is set actually for this week. But guys, we do real life deals. So I'm just showing you a real life example of what the heck happened here. So where Zillow really went wrong is they purchased too high, they banked too much on appreciation. They were thinking that, okay, if we buy all these houses in good areas, it'll appreciate, we'll make money, but that's not the rule of real estate. That's not the fundamental rules of real estate. It's buy correctly. The fundamentals of at least investing in real estate is buy right and invest in cash flow. Some people invest in appreciation, I understand that, but you don't buy over asking price or over retail price to bank on appreciation. Very rarely will that be an acceptable business model. What does this mean for the real estate industry as a whole? A lot of people ask me about the market. A lot of my students or a lot of people on my podcast are like, hey, you know, what do you think about this market? What do you think about this market? What do you think about this market? What do you think? My reaction is always the same. I said, man, if you can find a good deal, buy it. My answer will never freaking change. So what does this mean for the real estate market? That means that, at least I believe, that prices will be a little bit more stable. Sellers will be a little bit more level-headed now. Coming in, you know, it's gonna take a little bit. I think other iBuyers will slow down. I think their unit economics, the way that they're making money, as you could show Mike DePretti. I mean, making $3,000 or $5,000 in a house when you're investing, like, that's nothing. That's nothing. You cannot sustain a business doing that. I understand that they have a different model. They're building $1 billion business and going for an exit and stuff. I truly believe iBuyers will slow down after seeing this. They'll see the mistakes Zillow made. They'll realize that it's almost impossible to not make those mistakes unless they buy cheaper. It's almost impossible to make money in their business model unless they purchase homes cheaper. Meaning they will make lower offers, meaning sellers' prices will start to come down because they're heavy-headed right now. I would too. I mean, I'm the seller of that Orlando house. I'm not gonna accept anything less because look at the offers I'm getting. So what does this mean for you? You're an investor. You know, you're a wholesaler, you're just getting into the market. Maybe you want to buy your first investment home. Maybe you want to buy your 100th investment home. Maybe you're wholesaling a bunch of deals. What does this mean for you? Well, I just want to go back to tell you that real estate continues to be a local people business. So as these iBuyers come in, as Zillow comes in, Open Door, etc., these are all great companies, but as they come in, they're trying to make real estate a non-local, non-people business. And although they can succeed, they probably will not make money for a very, very, very long time, if ever make a profit. So what that means for you is that in your local area where you live, you can still find deals. You can still get into this game. Or even if it's somewhere that you don't live, just know that it is a local people business. If you find somebody, find a realtor, find a partner, find a friend, find a family member, find somebody in the game and it's local, you can get into it. Forget about all these iBuyers, forget about this stuff going on. Because even our company, we still do 10 to 12 transactions every single month, all off market, getting it 60, 50 cents on the dollar homes. I mean, you could just see it in Kissimmee, a poppin' market. I mean, I'm not lying, like, I can't make this up. Like, look it up. I can't make this up. We bought this in a few days ago, okay? in the craziest market. All of our salespeople in our team are in their 20s, okay? Nothing special. We don't have billions of dollars backing us up. We don't have to pay full price or more cash. So anyways, it's a local people business. You can get in the game with less competition if you know what you're doing. Depending on the market you're in, I would say try to venture off into markets near you that are smaller towns. Some iBuyers are not even buying there. iBuyers don't buy old homes. Old homes meaning older than 1980. So get into homes that are older than 1980. Maybe wood frame. Find a good deal. They don't really buy things like that. So there's a lot of little games you can play in this to get in this for you. And I feel that once this news comes out a little bit more openly to the public, which it is, but once it starts catching on, I feel that sellers will believe in mom and pop businesses or people like you and I a lot more. They'll trust us more. They'll really want to work with us because they're going to be like, these big businesses don't care about you. You think Zillow didn't have houses under contract to purchase when they just stopped this? They probably had 3,000 homes under contract with homeowners, real people like you and I. And they're like, hey, we're stop buying, forget it. Like, we're not buying your house. And all these people probably started moving, started packing their things, probably put deposits on their new homes. Like, they don't care. They don't care. They're so huge, they don't care. You have the advantage that you're small. You care. You can move quickly. You can move fluidly. You can buy faster than they can. Okay? You can make decisions faster. You don't have to go through all these steps. So I would use this to encourage you, if you haven't gotten in the game, to get in. Or if you're in the game, just know that there's so an abundance of deals out there. And now even more, just think about 2,000 houses less a month being available for you and I. And that means that 2,000 sellers less a month are like getting the offers that are being presented. Therefore, it's pretty exciting, actually. I think it's a very exciting time for us. And I really hope you enjoyed this video. As you can see, I'm passionate about this stuff. And I think I like Zillow as a company. Their story is amazing. The CEO seems to be a very knowledgeable person. And, if I'm wrong, if someone from Zillow is watching this and I'm wrong and you guys hate this, please comment and just share with me. I'm open to discussion, open to it, because I don't know it all. This is what I've read, what I've observed. I truly believe Zillow, you gotta buy houses cheaper, man. Thank you for watching this video. If you liked it, please comment, subscribe, share it with a buddy, a friend, a family member, a coworker. It'll help us with the YouTube algorithm. Please share that button or like it, hit that thumbs up, and I'll see you on the next video. Peace.